Well, as to Venezuelan leader Nicolas Maduro is at a Manhattan courthouse today as U.S. President Donald Trump announced that the United States will take control of Venezuela's massive oil reserves, nearly a fifth of the world's total. What impact could that have on Canada's oil industry? Let's unpack that with Eric Nuttall, partner and senior portfolio manager at Ninepoint Partners. Eric, thanks as always for joining us.
You bet. Good to be with you.
I don't know if you heard the interview we just did earlier, and we were talking to Cole Smead, and he was saying he'd buy Canadian oil stocks right now because they're all down. Is that something to look at today with the reaction that we're seeing on the markets?
Yeah, we were this morning. I think the reaction today is based upon a lot of ignorant views. This belief that Venezuela is suddenly, magically, after many years of chronic underinvestment, going to surge production. And not just production, but heavy oil, and therefore displace the demand for Canadian production is really, really dumb. To have stocks down 9-10% right now, I think, is a gift. We're short-term cautious on oil for other reasons. We're much more bullish in the second half of this year and beyond. I would just remind people that it's forecasted that this year is expected to be the peak rate of production from non-OPEC producers. That's 2/3 of global oil supply. Secondly, we think that OPEC only has about 1.4 million barrels per day of actual spare capacity, and yet demand is going to grow, according to the IEA, to at least 2050. And so even if Venezuela is able to resurrect their oil production, even if with profound challenges, U.S. companies are going to run back into country and heavily invest, tens and tens and tens of billions of dollars at a time when, given the current oil price, most companies are barely spending enough to keep their production flat. If all of that comes to pass, the world's still going to need every barrel that Venezuela can produce, in addition to every barrel that Canada can produce. And so we think a day when Canadian energy stocks and oil stocks are down 9-10%, we're definitely adding that, and we are in real time.
And with Venezuela, what would it take to actually get it functioning? And what should Canada obviously should be watching this? What would be the big concern if they do start to try and bring that oil fields back up?
You bet. So they are definitely a competitor with Canada for heavy oil production. We have been one of the loudest proponents of the necessity for Canada to build another oil pipeline of at least 1 million barrels per day of capacity to the West Coast to diversify our customer base. We cannot be under the thumb of the United States. We have long argued for this, and this past weekend's events is yet another example of the necessity for that. I would say there's a tremendous amount of guesswork involved right now in terms of the timeline and cost to add Venezuelan production. In the short term, Energy Aspects is forecasting that to add 500,000 barrels per day, it would take 2 years and $10 billion. Other forecasts we've seen is to get back to kind of pre-Hugo Chavez levels of about, in the high threes to about 4 million barrels per day. It would take at least 10 years and about $100 billion. Just so if you think of their pipeline networks, they haven't been touched in 50 years. So these are assets that have ongoing needs for TLC. Mm-hmm. They haven't been touched. So the cost estimate for that alone is almost $60 billion. So to see, if I were to have a playbook in terms of the fairy tale Trump plan comes to fruition, what would I be doing? Buying Chevron, buying Schlumberger, buying U.S. refineries because they're going to get cheap feedstock and shorting Canadian heavy oil stocks. That is exactly what we're seeing. So I think that once the dust settles, intelligent questions are going to be asked and answered, and people are going to realize that today's reaction is a massive overreaction.
And with that oil pipeline, will this be the impetus, you think, to actually really push it through? I mean, we hear talk. You think this might be it?
God knows. God knows. We've been listening to talk. I still don't think the Carney government, the Liberal government, is a massive proponent of the Canadian oil sector. I just don't think they understand just how hugely important the oil and gas sector is to the Canadian economy. I think they're still stuck in the fairy tales of net zero by 2050 at a time when the rest of the world is pivoting away from all of this nonsense. And we're one of the few countries that is impairing our industry. When, do you think the United States is using that to filter their strategy towards energy? And so we need to get out of our own way. We need to recognize that no public company is going to step up to build another pipeline to the West. It will at first have to be a taxpayer initiative, and yet it's in the national interest of all Canadians to get out of under the thumb of the United States and Donald Trump and increase our export capacity and, very, very importantly, diversify our customer base. It is it's the very definition of being in the national best interest.
And now you mentioned earlier you were cautious for the start of the year, but the second half of the year, that's what you were looking at. What's the reasons for that?
Yeah, so we think there is an imbalance right now in the global oil market. We do see global inventories growing for the next quarter to two. What we think is that non-OPEC supply will be peaking the next couple of months with final projects coming on stream, with a view of demand growth a little stronger than consensus this year. We think that a lot of the excess will be able to be mopped up by the market. And the market will, at some point in the first half of this year, start to look beyond the near term and recognize that we're in a world where there's lack of sufficient investment, there's lack of sufficient exploration and exploration successes. Non-OPEC production is peaking this year. OPEC has very limited spare capacity, and yet demand is going to grow for decades to come. And so we are heading towards an oil supply crisis where there is a structural imbalance between demand growth and supply growth. U.S. shale growth very clearly has and is coming to an end. And so we're very bullish on the outlook for oil going forward. We think that the oil price will have to rally to incentivize a long lead, high risk, very expensive exploration and oil developments. That is not an oil price in the 50s. It is not an oil price in the 60s. And honestly, it's likely not an oil price in the 70s. That's the future coming. And I think that will start to be expressed in the valuations of oil stocks.
Okay, we have to wrap it up there, but thanks as always, Eric, for joining us. Appreciate it.
My pleasure.
Eric Nuttall is partner and senior portfolio manager at Ninepoint Partners.